Okay, so it is the daily market analysis. I have been streamed a little bit late today, but have been streaming since about 10 something, 11 o'clock this morning. We had for today so far the RBNZ, the Reserve Bank of New Zealand, surprising markets with a rate cut from a 5.5, if I remember correctly, to a 5.25%. So a surprise rate cut from the RBNZ. We did talk about this over the last couple of days, that it was on the borderline whether they were going to cut or whether they're going to stay. With talks about cutting, they've decided to cut. We've seen a move on the Kiwi dollar. We've made money on that. 1 hour before this session, we had the UK with their CPI number. We'll talk about that as well. We've seen a reaction on the pound dollar. And for the rest of the day, well, in the lead up to the next news at 8:30 p.m., we do have the US CPI numbers to be released. All right. So I'm happy today because on the Discord channel, we've had many members saying from yesterday's session, a lot of trades, take profit, made money. So again, if you're on the session, if you've had trades that hit your take profit or you made profits, do share it in the chat or leave a comment in the video or share it in Discord, just so that I know, that this session is really helping, being a benefit to you guys. Okay, and the only reason why I'm doing this is to really try to help you with your trading journey as well. So do let me know if it helps. With that, hey Soon, hey John Chong, hey Lindley, how you doing? Hey Christina, good morning. Okay, now quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only. Please do your own due diligence, as the contents of this webinar are not intended to be a recommendation to trade a financial product. As your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. I've just realized that part of this screen is missing, so I have to adjust that for the next time round. Okay, with all that said, now what was I going to do? Yeah, okay. I'll adjust that screen the next time round. Thanks, John. I really appreciate that. Okay, now with that said, we take that one away and we look at the news. Okay, so what has happened since the last time we spoke? Yesterday we had claimant count change, which we spoke about that for the UK. Later into the night, well, not later into the night, at 8:30 p.m. GMT plus 8, we had the PPI number for the US, PPI again being producer price index, inflationary measure for production. It slowed down from a 0.2, expected to stay at a 0.2, got released at a 0.1. So PPI, producer price index, inflation gauge for producers, slowed down to 0.1, while core PPI went from a 0.4, revised down to 0.3, and was released at a 0%. Right, so we saw PPI slow down, inflation growth slow down for the PPI, on the PPI, which you would notice that at that time we saw the, where was it? At 8, right there. Right, in the lead up to that news, we saw, well, that candle actually. We saw the dollar index sit around that point. It didn't even fluctuate within this range. It came right down, tested this 102, 103 level, broke below 38.2, sat there at 9, and then continued lower, breaking that 103 support level. Right, it came all the way down late last night, early this morning, down to that 102.55 level, and so far it's been consolidating at this point. Right. So now with that, just realized I need to change this quite a bit. Okay. Now with that said, sorry. Okay. Now with that PPI, we saw the reaction on that, a slowdown on inflation growth for the producers, pushing the dollar index down, breaking that 103 price level. Through to this morning at 10 a.m., we had the RBNZ with their surprise rate cut. Sorry, my voice is going oddly. Okay, it was a 5.5. Hang on one second. All right. I was recording a video earlier today, so I think that's why my voice is going. Okay, so rate cut from the RBNZ was 5.5, came out at 5.25. We knew that it was a borderline case, whether they would cut or keep on hold. They decided to cut 25 basis points. What happened on the Kiwi? Pretty much as expected. We expected it to push up before breaking down. So on release of the news, it was at 0.607, almost 0.75. It pushed right down within the hour, down to 6032, as low as 6022, continued down slightly, rejected 0.6, and is now consolidating at this point. Right, so this was a trade that I got out at 0.6 because I looked at a round number. Whenever it comes to a round number, I tend to want to get out the trade. So that was what happened on the Kiwi dollar as it pushed to the downside because of that rate cut decision. Surprise rate cut decision. Then at 2 p.m., 1 hour ago, we had the UK CPI year-on-year. Inflation growth number for the UK, it was a 2, was expected a 2.3, it got released at a 2.2. So remember, the Bank of England's inflation target is between 2 to 3%. It's between 2 to 3%. It was at 2 year on year. It came out at 2.2. It's still within its inflationary target. It didn't climb as high as expected, although it did show a bit of an increase. The question leading, all this data is feeding into the question of whether the Bank of England is going to cut rates at the next meeting. Right, the last meeting they said, hey, we've cut rates this time. It doesn't mean that we're definitely going to cut rates the next time round. It's going to be data dependent, but it's not a certainty. Now, with CPI year on year from 2 to 2.2, although it's still within its target, it does seem like as inflation slowly, if it does slowly creep up, then it's going to spur the Bank of England into taking decisions to cut rates, right? To keep it on, to cut rates, to try and bring it back down. Hang on. To try and cut rates, to try and bring it back down, or to try and keep the CPI from climbing too high. So with that, then what you see is that, so we're looking at a possible rate cut scenario coming around, possibly on the UK. So that's why we saw the pound dollar go from 1.2860 within the hour down to 1.2817. It was not out of the Bollinger, but it's bounced right back in. Okay, so it's sitting along that 1.284, just under 1.2840 at this point. Small drop, retrace, possibly going to push back down. We'll talk more about that shortly. But the big thing that's coming up for today is at 8:30 p.m. GMT plus 8, where we have the US CPI year on year to be released month on month, and of course CPI month on month as well. CPI year on year for the US was 3%, expected 3%. What do you think? Is it going to come out? Put it into the chat, let me know. What do you think? Is it going to come out higher than 3? Is it going to come out lower than 3? I don't think that it's going to come out at 3. So put it into the chat, let me know, what do you think? Is it going to be higher or lower than 3%? John Chong with 3 winning days, fantastic. Hey Stefan, how are you doing? Haida says 2.9, very specific number, 2.9. All right, what about everyone else? While you're putting that in, I do think that there might be a likelihood of a slightly lower number, right? Below, I think it might be below 3%. And if it does come out at below 3%, that might actually support the Fed Reserve's decision. Well, I mean, they've already decided. It's almost a done deal that they're going to cut rates in September, but it might support the idea that they could cut rates more, right? So now it seems like it might come to a decision of not whether the Fed Reserve will cut rates in September. When it loads, it looks like with the decision on the 18th of September, it looks like it could be a case of 100% likelihood to cut rates, but we're looking at a 50% chance or above 50% chance for a more than 25 basis point rate cut. We're looking at it to go to that 5%, so a 50 basis point rate cut from the Fed Reserve in September. A bit of a catch-up game, possibly, but looking like, with all the data coming in, it's not about whether they'll cut rates, but more about how much they'll cut by. So I think that if we do see the CPI for the US come in at a 2.9, below 3, that might suggest to the Fed Reserve that they could cut rates. Well, not they could cut rates, they'll definitely cut rates. That they could cut a little bit more just to get it to its 2% target. Yeah, so I think that I actually think that if we do see a slower number, we're going to could see a big drop on the dollar index. I think even if we do see a slightly higher number, we could still see a rate drop on the dollar index. Right? Because if you look at what happened in April, was a long time away. Right? April was a long time away. But in April 10th, when we saw that push up, but scenarios were so different back then. If we see a 15th of May, which was about there, you see on the release of the news, we saw it drop, although it came out at a 3.4 as expected, with a small drop, from a 3.5 to a 3.4, but it came out as expected. So I'm thinking a 2.9 or a 3, we could still see a drop. I think even a 3.1, we could still see a drop, because the idea is that they're going to be cutting rates in September. Unless we see a 3.4 or something, then we're going to see a massive spike. But I think more likely scenario would be for that drop. Okay, so that's what we're looking out for in the lead up to the news. And then through tomorrow at 9:30 a.m., we have Aussie employment numbers to be released. Doesn't seem like it's going to be a big surprise there. Through to tomorrow as well, with the GDP number to be released for the UK, and then retail sales number for the US in the evening. Now, with that, then looking at the dollar index, right? Looking at the dollar index here. Take that away. 50 is there. Let me just check my charts for a while. I mean, I've been looking at this for the whole day, but now I want to just double check everything before I tell you levels. Okay, so now looking at this, that's broken, so we can take that away. It's come down to past 61. All right, so let's just take that away for now. Let's take that away. I don't need that as well. Okay, and then what I'm looking at here on the dollar index is a very small patterny kind of thing, but it looks like that. And then we have that happening, right? Then I'm looking for it to break, to head lower, back down towards that 102 level. Right, so the main thing that I'm looking for here would be for it to break below that 102.55 level, the previous low that we saw early this morning. There we go. Okay, so today being the 14th of August, the dollar index is pushing down, is already pushing down now anyway. We're looking for it to, well, it's CPI data pending, break below 102, I'll put 102.50, could trade down to 102 support level. Right, so we see that doing that, push down, break below this point, we'll see it come down. CPI pending, we're looking at this as below 3%. We'll be looking for it to break below 102.50 down to 102 support. Good. Any questions on that so far? If you do, put it into the chat and let me know. Which, you know, the thing now with the dollar index pushing down is that it's going to conflict with a lot of the pairs that we're looking at, right? Why I say that is because we're looking at the Kiwi dollar push down because of the rate cut. But yet, you know, do we have a rate cut from the Kiwi? We should push prices down. But then we're looking at the dollar index possibly weakening, which could push the Kiwi back up. So it becomes that conflict where we have Kiwi fundamentals dragging it down. We have US possible rate cuts dragging the dollar index down, which could prop the Kiwi back up. So it's going to be a bit conflicting here, okay? So we look at this on the Kiwi. We've done that already, okay? That was what my trade I was sharing during the stream earlier. That's triggered. I've put the fib level up here. That trend line is broken, I don't need that. And we have 38.2 here, just below 0.6. We have those levels there at 5980 or 5975. I think that if you're looking at this, as it broke, we don't need that because that's broken 61 already. That's a top there. Looking at this on a 50 is right there. Okay, so on the Kiwi dollar, what I'm looking for is that, hey Anil, how you doing? Push up, retrace, if it doesn't break this area. Okay, so what I'm looking for here on the Kiwi would be for it to push down to test this area and possibly push back up again on dollar weakness, right? On dollar weakness. My resistance is here, which is fine, but I would like to take that one, that swing level as a point of reference. And I'll put this one, I don't really need that there. Okay. So what we're looking for here is either for it to bounce at this 0.6 level, which is there right now. Sorry, my throat is really killing me today. Okay. Or to push down slightly to that 5980 level and bounce back up. So I'm looking at it at 5990. Stop loss will be about 20 pips. Take profit, you have a good 90 to the upside. Right, so that's one view. And then if it doesn't break, then you're looking for this to push up. I'm looking for that move. Okay, so the Kiwi rate cut decision to have maybe one more leg down, test this area, bounce off, push back up, 5990, 20 to 90 to the upside. Looking at this to buy at 0.5990, stop loss 20, take profit 90 to the upside. It might push up from here. If it pushes up from here, then that's fine. I wouldn't, I mean, I was thinking of doing that. I was thinking to suggest that, but I don't think it's something that it might be a bit too risky because it could come up slightly before pushing back down again, right? Or you could be looking at 6020, 20 to 60 pips to the upside that way. But I like that one a bit more. Then onto the Aussie already pushing up, right? So if you got onto the Aussie to the upside, that's running well. If you didn't, that level broken, I would drag this right up and say that if it breaks above that level, we could see a bit more upside. Right, 61 broken. I'll take that and check. There you go. Those points there. So take that one away. That's my support level that stays. That's fine. I don't need 61.8. I'm looking for it to break to the upside. I'm looking at about that point there. So with the Aussie, what I'm looking for, and this could be quite an immediate, quite a soonish kind of trade, would be that I'm looking for it to break above 6650. I'll give you a bit more space at 6660. I'll have a 30 pip stop. I'll have a 60 pip take to the upside on the Aussie dollar. Okay, so Aussie dollar 6660, stop loss 20 or 30, stop loss 30, take profit 60 to the upside. There we go. Hey Nuachuku, how you doing? And then like that, you'll see that even the TSRI MACD is going to cross, it's not ready yet. If it pushes up, I think you're going to see that crossover to signal that buying potential to the upside as well. Okay. Then, if you look at this Kiwi, we're looking at maybe have a bit more downside. Aussie to push up, that feeds very nicely into the Aussie Kiwi. We spoke about this yesterday where we're looking to buy up from 1.0945, stop loss 25, take profit 50. That worked out as a charm. I'll tell you, I did not get into this trade. I do analyze the Aussie Kiwi, but it's not high on my watch list. Okay, so that happened. That is done. Now take that away for now. What you also would notice is that Aussie Kiwi, from this move down, it's right at that 61.8 level, right? So if the Kiwi does continue to weaken and the Aussie pushes up, break above 61.8, the next move we'll be looking for would be at 1.1060. Stop loss can be relatively tight at 30 pips. Take profit, I'll go for the next high at about 80 pips to the upside towards that key level. So that's going to be interesting for the Aussie Kiwi at that point. Okay, take that away, and that's my 50% away, done. So we see that break above the swing level, 61.8, trade up, driven driven together by the Aussie dollar strength and possible Aussie dollar strength and possible Kiwi weakness to continue by the surprise rate cut from the RBNZ. Okay, then we come to the pound dollar. Pound dollar, this was a trade that we spoke about yesterday for it to retrace and then to break above that high, that level that it retraced from. 20 pip stop loss, 40 pip take profit. I did that, 40 pips done, relatively straightforward. Take that away. If you got into that as well, put it to the chat and let me know. Now, CPI number for the UK, 2.2. That just got released an hour ago, an hour and a half ago now. We spoke about that. We saw the pound dollar push down off that resistance level. Resistance level also formed by that 50% retracement. So now, bullish trend line, don't need that, take it away. At this point here, we have that. And then let me just put all my levels in there. So 50% is right there, that makes sense. It's hesitated at 23.6. I am thinking that dollar still pushing down slightly. It's going to test and it's going to retest this resistance, and then we'll look for a break to the upside on dollar weakness, on further dollar weakness. Okay, but I want to highlight that point instead of that 61.8. So what I'm looking at here is that. Okay, so we have this move up. It's hesitating at 23.650 is right there. It's likely to push back up, consolidate along this resistance. Then we're looking for an upward push on the pound dollar. What I'll be looking for in this case, and it seems like I'm going to be very dollar bearish at this point, but we're looking at a tight 25 to a 65 to the upside on the pound dollar, driven by possible dollar weakness. Okay. 1.2872, 1.2875, 25 to 60. It's done its retracement. We've done that. So we're looking to buy at 1.287, 1.28. 1.2875. 1.2875, stop loss 25, take profit 60. Stop loss 25, take profit 60 to the upside. That's pushing up, that's fine. Euro, we're talking about this, which will lead to the euro yen shortly, but I'll tell you about that later on. Euro pushed up. I did that trade, didn't go all the way to take profit. I got out at about 40 pips just as it was pushing out of that Bollinger Band. Okay, so the euro to the upside. Yesterday for me was pound and euro 40 each to the upside. Now the euro is at a very interesting point. Don't need that and don't need that because it's all broken. Whereas broke out of the consolidation, it's pushed up. Why I say it's a very interesting point is that we could, let me drag it back, okay, show it to you in H4, right? It's at that point where we've seen it, here we go. We've seen it do that. Test, come back down, test, and then a massive drop. Okay, so it's at that point where that happened the last time round. Now fast forward again, test, test. It could form a double top. It's not a given that it would definitely break. I would love to see it break because I think it's going to get good potential for the euro yen, but it's not definite that it would break. Right, and even then, just check something. That's at that point. Yeah, okay. So what I'm looking at here, so I'm just thinking aloud here, is that if it does break, we want to see it go past at least that point before we'll be looking to buy it up. All right, so a break of this resistance means that it needs to go past 1.1020. Then you could be looking at buying it up 1.1025. The stop loss would be about 30 pips. Take profit, you got a massive 100 pips to the upside. Breaking through that resistance. What could happen in this is a test and then that way. Okay, but also considering that there could be a double top scenario here on the euro dollar, you could also be looking for a rejection at 1.0975. Stop loss would be about 30. Take profit would firstly come down about 80 pips to that 50% level. All right, so we're looking at that possible scenario where it does that as well. Because we have been looking at a lot of dollar weakness scenarios. You could have that in the back of your mind. I do think it's a little bit of a less likely scenario, but something you just have in the back of your mind, right? I still prefer the buying setup more, 1.1020, no, 1.1025, 30 to 100. I still like that one more, but you just want to keep in mind that there could be a double top formation forming. the possibility of a double top. Okay. There we go. So euro dollar looking to buy at 1.1025, stop loss 30, take profit 100. If it does that, if it forms a double top, then we're looking to sell down at 1.0975, stop loss 30, take profit 80 to the downside. Now then, remember again, pound dollar shot down, now retracing. Euro dollar possibly pushing right up, which is why we saw, or we're seeing, the euro pound push up. Right, within that range, it tested, didn't push down, but we're seeing it come back into this range at that point, and it's testing 38.2. I think that if the euro dollar does push up, then you could be looking at the euro pound pushing up as well. What you'd be looking for in this case, let me see, above that point, 8580, stop loss no more than 20, take profit 45, 40 to the upside. We're looking at that. You can even do 15, I think would be generous. Euro pound test up, yep. Okay, so that would be what I'll be looking for on the euro pound, as it euro dollar push up. We're looking for this test higher to push up. That makes sense. I'm happy with that. And let me see 50 on that. So it's actually better on 50. Right, so we have 50% right there in that area. So we're looking for it to break 50 before we'll get in. Now it's testing 38.2. Okay, then with that said, looking at the yen. This morning we were super keen. I think we're all looking at it. We're all super keen on the yen, as it was, and I was highlighting this on Discord, like yen's coming, yen's possibly coming, right? Or yen setup coming, developing, because we saw that pushing down through the night, retraced early, no, not early this morning, but this morning, push down, and then for a moment it looked like, you can see that candle there, it looked like it was going to close below and trigger that setup, but it didn't. It came right down, looked like it was going to do it, and then bounced back up again. So now I'll move this to the side because I still do think that that's a setup to look out for. It's that triangle. Let me see. Take that away. It needs to stay below this point. I don't think we need that trend line anymore. Okay. So US yen needs to stay below 148. Needs to stay below 148. We want it to break down, and we'll still look to sell at 146.20. Okay. US yen needs to stay below 148. We're still down at 146.20, 40 pip stop, 200 pip take to the downside. Where did my thing go? Ooh, okay. There we go, 146.20, 40 pip stop, 200 to the 61.8. I think, I know many of you have been trading within this range. You can go down. I wouldn't do an hourly time frame. You can go down to the smaller time frame and trade that as well, because this is a reasonable range. This is a 150 pip range. So you can still trade that on a smaller time frame. Same thing, we're looking at it to maybe test a little bit higher, but I think it's likely to sit around here, and then I'm looking for this move lower. Okay. Now on to the euro yen. We were talking about this, that didn't trigger, take that away. I've just put that in because I was just thinking that I think John was asking, or someone who was asking about the euro yen. Ronaldo was asking about the euro yen. I was looking at it to break past that point. Euro dollar strength, gonna drag the euro yen up. With the yen sitting in a bit of a consolidation, we're going to see the euro yen pull up towards that 61.8 level. Right, so that trade could work. Let me see. Yeah, that setup could work. Down, that's fine. 50 is right there. 38.2 is probably going to coincide at that point. So I think what you could do is that you could trade the yen up, the euro yen up, right? But if the US yen does start dropping quite strongly, that could quickly reverse back down again. Right, that could quickly reverse back down again. So if you haven't already, and and that move up, if you look at this, even from this point, is about a 75 pip move to the upside. You might want to do this on a 15-minute time frame, right? Look for it to retrace slightly before you would try and trade it up. You would have a stop loss at about 40, 30 pips that way to the upside. Right? I would do this on a smaller time frame. I wouldn't do it on an hourly. On an hourly, I would actually be thinking of it to go up, test this area, and then possibly look for it to push back down again on yen, on dollar yen to push down. So maybe something to look out for would be a test and reject of 163. So you're looking at 162.50, stop loss will be about 40 pips. Take profit, you can come down to the support at 200 or even 150. So we're looking at possibly that for the euro yen. Right, euro dollar could push up. I'm just thinking that the US yen, if it does drag down, there is a lot of space here that it could fall into, which could end up dragging the euro yen down. You look at that move there on the dollar yen also reflects like that move there on the euro yen. And then on the same period, we actually saw the euro dollar push up. So as much as the euro dollar push up, the US yen dragged the euro yen down as well. Okay. Then onto the pound yen, still sitting in that consolidation. Take all that away for now. Sitting right across. I think it's the same story as if the yen drops. Same thing, we saw that correlation. I'll be looking for that. I'll be looking at those points. take that one away. 50 coincides very nicely there. I don't need that. And we have that. So it's all in that area. So I'm just cleaning up, so-called cleaning up the charts in that area. So if it stays below 190 or 190, if it stays below 191, which is that long-term 38.2, it's going to sit in that area. It might push up because the pound dollar could push up first, right? The pound dollar could push up first before the US yen reverses. So on the pound yen, what we could be seeing is a test, and then we're looking for that to break to the downside. Then with that, we'll be looking as a possible selling opportunity below 188. You could rush in a little bit. I think, yeah, that's fine. 187.60. Stop loss, you'll be looking at a 50 pips. Take profit just down to that point. First will be a 250. It could get there quite quickly. The pound yen has significant volatility, so it could get there with it very quickly once it breaks, if it breaks that support level. All right. Then, hey Jamil, how are you doing? Jamil just came on and said the US CAD is running. The loonie is running. We'll look at that shortly. Then we'll look at the Sweezy. That is dragging down because that's starting to break that channel. Wait, let me just do a quick review. That's still sitting there. Everything is still sitting right across. Yeah. Okay, so everything is still sitting right across. The Sweezy is starting to break down, driven by that dollar index, right? Driven by that dollar index. Take those away. No, we don't even need that. I think that 50% is going to stay. So I'm looking at this to break down. I would maintain this view and highlight that that point is breaking to the downside. If you haven't got into this trade already and you want to get into the US Swiss franc, the Sweezy, I would say that you're looking at 8625. Give it a bit of space. There's 9 minutes to the candle close. It's slightly outside the Bollinger, so it might sit there, it might retrace a bit before continuing lower. You're looking at a 60 pip stop, 60 pip take, 30 pip stop. Okay, so I'll be looking on the US Swiss franc at 8625, 30 to 60 to the downside. Sell at 0.8625, 30 to 60 to the downside. To 60 to the downside. Then, like Jamil said, the CAD, the loonie is running. It is pushing down. It does have that downside potential, breaking that consolidation, which we spoke about yesterday. Now, if you haven't got into this already, same thing like the Sweezy, I would say give it a bit of space. We're looking at below 1.37. Is that close? You want it to break below 1.37. You have a 20 pip stop. You have a 45 pip take to the downside. Okay, so this one we're looking at 1.37. Stop loss 20, take profit 45 to the downside. because I want it to break past this point. Right, and that whole thing is done because 61.8 is broken as well. There we go. It could drop a lot more, but I just want to catch that swing, that kind of level first. All right. Yeah. Then on to gold. Very important level that we're looking for. It sat there in consolidation. It pushed up slightly. I didn't even do anything on gold because it sat in it didn't really have that big, nice trend, directional trend. So I didn't do that. But if you look at this now, as it shows a bit of an upside, again, dollar index trying to break lower. I would say that gold, we're looking for it to break 24.80 to get up to 25.20 seems a bit, I mean, I think I know we were doing some extensions that got 25.20. But I think that we'll look at 2,500 first as a nice round number. Right, so if it breaks 24.80, I'll cash that one first. So you're looking at 24.75, 24.75 to 24.80 to 2,500. We're looking at that kind of move up. All right, so gold is climbing higher above 24.75. You see 24.80, which is not very far away. We'll see 24.80 beyond that. Beyond that, we'll see 2,500. Main thing is to see what happens here on the dollar. If it does push down, we're going to see that weakness on gold. We're going to see, or not the weakness, the strength on gold, inverse relation. Kiwi is still sitting there, not decided. Aussie, everything's sitting right across. Pound is sitting, yeah, it's all sitting right across at the moment. Which is good, because you don't want it to move too much before big news, because it will throw the whole plan out the window. If it sits there, at least we have all our setups and our levels looked out, marked out already, and then you would be able to take advantage of it once it starts moving. Okay. So if you haven't already, please remember, click that like and subscribe button. That would help massively. If you have any questions, put into the chat. I'll keep the stream running for a little while more. We can monitor the markets together. Beyond that, if you have any questions, you can put on the Discord channel as well. Please trade well, trade safe. US CPI to be released later tonight. I'll look forward to hearing the good news from you guys tomorrow as well. I'll see you all on the stream tomorrow. Take care now.